Hello, everybody. Let's talk a little bit about the economy and why the entire stock and crypto market is literally going through the roof, rejoicing and dancing and having a good old green day. What exactly happened today? Well, pretty simple. The Federal Open Market Committee, they had a meeting and they raised by 75 basis points. Now, 75 basis point rate hike is very much expected. Now we have a 2.25 to 2.5 rate hike. Now this brings us into something called a neutral rate. What exactly is a neutral rate? Well, the expected inflation for the United States is somewhere between 2 to 2.5%. So if you have a rate of between 2.25 and 2.5%, this is approximately neutral. This is exactly what you want. So the question is, where do we go from here? I'm going to tell you what I heard in the meeting and give you some of my own comments in just a moment. But before I do, I'm having a little bit of a hard time growing my channels. And it's a little frustrating because very few YouTubers can actually talk about real estate, stocks, crypto, and micro and macro economics. And I made money before I ever started YouTube. Only a handful of YouTubers can do that. So if you got some love for me, I have 3 channels. Please subscribe to all of them if you want to learn more about finance. During the meeting, he raised it by 75 basis points. This we already knew was going to happen, or at least you knew if you've been following my channels. The interesting thing, he kind of gave us a forecast that it's probably going to be 75 basis points in the September meeting as well. He literally says that we were not going to hesitate and we can possibly see another unusually large rate hike. So he's probably saying that we're going to get 75 basis points in the next meeting. I'm expecting it, and I actually am going to be happy if we get it. Why am I happy? Well, tear the Band-Aid off. Let's just get this thing done. Stop, lily-lacking around. Let's just get this thing done. Pull up your big boy pants, and let's get through this. The sooner, the better our recovery is going to be. The sooner, the faster our recovery is going to be. The sooner, the faster we're going to be in 2023. So we have a good second half of the year, not a bad total year in 2023. Another thing that he said, somebody asked him about the future. He says, in the future, we can have a slower pace of increasing the federal fund rates. What is that telling me? And what I've been saying for quite a while. I believe the federal fund rate will be somewhere between 4.5% to 5.5%. The reason why I believe this is there's only so much that you can raise the interest rates. Currently, we have a debt of over $30 trillion. For every 1% that we raise the interest rates, our debt payment is $300 billion, plus or minus. If we go all the way up to 5%, that's a $1.5 trillion debt payment. You think the United States can withstand that for too long? No, it can't. We're going to raise the rates and then we're going to bring it down. And we're probably going to have something around this neutral rate that we have right now. But before we can have a neutral rate, we are going to go up again. These are my predictions of what I think is going to happen. I actually wrote it down during my live. Currently, we have 2.25 to 2.5. In September, we have a meeting. There's no meeting in August. We're probably going to have a 75 basis point rate hike, which brings us to 3 to 3.25%. In November, we will probably have a 50 to 75 basis point rate hike, which brings us to 3.5 to 4%. December, I forecast a 50 basis point rate hike, which is going to bring us to 4 to 4.5%. January is going to be the next meeting. I foresee a 25 basis point rate hike to bring us to 4.25 to 4.75 rate hike. There's no meeting in February. There's going to be a meeting in March. I believe that in March, we will get either a 0 or a 25 basis points rate hike, which is going to bring us to right around 4.25 to 5% interest rate. This is what I think is going to happen. Now, I give my numbers a plus or minus of 0.5%, which is where I'm going to get 4.5% to 5.5%. Inflation is going down, guys. We're going to get GDP tomorrow. Jerome Powell was asked about recession. He's like, oh, we're not a recession, blah, 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 blah. Listen, a recession is 2 negative quarters of GDP. First quarter, 1.6%. Second quarter, we're going to get somewhere around low 2%. This is the fact. We're going to get negative GDP. In order to be an official recession, somewhere in 2023, there's going to be a board of economists that are going to review everything and either deem this or not deem this a recession. Despite what they say, it's irrelevant. This is a recession. However, by the time they actually decree if this was a recession or not, and we're out of a recession, then they're going to say, hey, yeah, we had a recession, but we had a very short, soft landing, and we moved on from the recession. That's what's going to end up happening. I think that the markets see what's happening, and that's why literally everything is green. I think that inflation is going down. Why do I think inflation is going down? I will give you 3 reasons why I think inflation is going down. Number 1, huge layoffs by all the major companies. Google is laying off, Robinhood laying off, Coinbase laying off, Tesla laying off, Walmart laying off, right? All the major companies are laying off. General Motors, Twitter, I mean, the list goes on and on. Matter of fact, the only company that's actually hiring is Palantir because, again, nobody listens to this channel, but Palantir is good for good times. Palantir is great for bad times, and Palantir is stupendous during neutral times, but nobody listens, and that's okay. And because these companies are reducing the workforce, there's going to be layoffs, which means people are going to go on unemployment. And what's the best way of curbing spending? You reduce people's money or ability to get money. It's literally the same concept as raising the interest rates. You're making it more difficult for people to get their hands on money, therefore they're spending less. And since they're spending less, the demand goes down. So no matter what happens to the supply, if the demand is going down, this is going to reduce inflation. This is economics 101. So number 1 is employment. It is going down. Number 2, stocking of supplies. What does this mean? Walmart, Target, they bought tons and tons of goods that they cannot sell at fair market value, and they have to reduce their prices. There's literally third-party liquidation companies that are buying them off the boat, off the pallets, off the containers, and sending it directly to their warehouses. It's not only Walmart, and it's not only Target. I just use them as the names because they're like the leaders in everything. The reason this is happening is because their supply chain issues was best in class. In other words, everything sucks, but they made the best case scenario. And when they had an opportunity, they bought as much as possible, not thinking that demand would be coming down right now. So this is going to decrease demand even more, which is going to reduce inflation even more. And third, and this is the main reason why I believe inflation is going down, and the next CPI reading is probably going to be lower than last month, or this is going to be the last high month, and then it's just going to be reducing. In my personal opinion, you can screenshot this video. This is my hypothesis. I'm not a financial advisor, purely entertainment and educational purposes. But gas prices. Let me show you guys something. I've been covering gas prices on this channel for approximately the last 6 or 7 weeks. When I started covering gas prices, the average national gas price for a gallon was $5.01. Right now, the national average is $4.89. You might say this is not a big deal. However, it is. Prices are coming down. If you compare last month's average to the current average, which is $4.30 per gallon, that is a reduction of approximately 14 to 15% of the price of gas. Since gas and energy account for 40%, nearly 40, 35 to 40%, of the CPI, Consumer Price Index, of all this inflation. That means as gas is coming down, inflation is coming down as well. You're not going to notice these little numbers. That's why I'm trying to show it to you in every video. The current average today is $4.30, but yesterday was $4.32. A week ago was $4.46. If you start comparing today to a month ago or today to a week ago, you see it a lot more than today compared to yesterday. My friend is a truck driver. Shout out to my man Oleg. Love you very much, man. Shout out to Jacksonville. He said, Adam, everything you're saying is true. Now he's confirming, I'm not asking him, but we just talk all the time. And he's like, yeah, everything you're saying is true. He says a month ago, diesel cost him $5.50 a gallon. As today, it costs him $5 a gallon. Now he's filling up once every 2 days, as opposed to us filling up once a week or so. I do once a week. So for him, these gas prices are tremendous. If the gas prices are going down, the shippers, the people that drive the truck, can charge less. If they can charge less, the distributors could charge less, which means the big box retailers could charge less. Now, gas prices accumulate everywhere, right? From the boats to the shipping, to the container yard, to literally the little trucks driving around, everywhere. Everywhere, everything has to do with petrol. Everything has to do with gas. As gas goes down, inflation goes down. Let me show you one more indicator. This is crude oil. Crude oil is exactly the gas that you put in your car after you have refinery, after you have production, after you have distribution. It's down 10.4% for the week. This number was actually down for the day. It went up after this FOMC meeting. If you look, though, for 6 months, we're only 13% up for the last 6 months. If you look at 6 months, there was a point right around June 9th where the cost of a barrel was $122. Right now, the cost is $98. I believe that June 9th was the peak of gas prices, in my personal opinion. If that's the case, there's something called a lagging indicator, where everything takes time to feel. Now, just because gas is cheaper now doesn't mean you're going to feel it actually at the stores in a week from now or a month from now. No, it takes several months, 2, 3, 4 months. Why? You already have supply that you paid for. The cost of everything is already baked in, which means the next shipment, the next supply run, then the prices start going down because now gas went down. If this holds constant, inflation is in fact going down. We are in fact in a recession right now. The reason why I keep telling you guys on this channel is by the time most of the country is going to realize we're in a recession, the recession will be over. In my personal opinion, 4 to 10 months, this thing starts turning around. The first half of 2023. The second the Federal Reserve is going to start lowering the interest rate, instead of 75 basis points, 50, instead of 50, 25, the market starts going up. The moment that they go from 25 to 0, it's going to skyrocket. But the moment they go from 0 to possibly bringing the rate down, which will happen, Jerome Powell said that. Remember, they can't keep charging 5% or 4% or 3%. Why? Every single percent is worth approximately around $300 billion in American debt. We cannot afford it. So that's why they're going to bring the rates down. So all these things that I just mentioned today is the reason why you see the stock market skyrocketing. The NASDAQ is up 4% for the day. Palantir, 6%. MicroStrategy, 10%, which is basically Bitcoin. NVIDIA, 7%. Unity, 11%. Tesla, 6%. So on and so forth. And if you actually go to Ethereum, it's up 12.5%, guys. Let's go to Bitcoin. Guys, Bitcoin is up 8% for the day, $22,770. Look, I've been saying this on this channel, been super transparent, that I believe after Q2 earnings of this year, which we're currently in, I will start deploying the money that I have on the side to the stock market, which I've been doing and been nibbling. Why? I do believe Q3, Q4, it might not be that tremendous quarters, but it's going to start a recovery. Dollar cost averaging is your friend. Dollar cost averaging allows you to get in on the best possible price, whether it's going up or going down, because you're buying on a daily basis. Now, if you're dollar cost averaging every week, every month, it's not the same. Daily basis, it's the best possible way. And if you can buy twice a day or 3 times a day, that's even more dollar cost averaging. You're literally getting the best possible prices because there's fluctuations within the day. That's what I'm personally doing with my crypto. That's what I'm personally doing with my stocks. When the market is going to stabilize and the rates are going to go back down, we're going to get a stable mortgage rate. This is also when the real estate market stabilizes. The real estate market, in my personal opinion, not financial advice, yada, yada, so on and so forth, is not going to collapse. We're going to have a 5 to 15% correction throughout the country. But we had major double-digit ups for the last 3 years. So what's the big deal if we lose 5 to 15%? It's not the end of the world. Everybody has tons of equity in their home. Guys, please don't forget to like, share, and subscribe to this channel. Like I said, it seems that the to the moon, blah, 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 blah. Those type of YouTubers get the most views. The YouTubers that can actually explain what the heck is going on For some reason, people don't like watching them. And for the people that actually do watch my channel and do like my channel, guys, I appreciate you guys this much. Thank you so much for letting me make my dream an actual reality and to serve you with this type of content. You guys have a great day.